don't believe the Brics feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up, because they see a treasury bond default, because they see a government debt. The United States, it's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold a lot better than the Western nations do. Therefore, they're going to continue with their gold load.
Pretty picture, but I think investors really should be prepared for the worst if you're not getting out of stocks. If you want to be in stocks, I would recommend defense, energy, and mining. But I'd be out of tech, I'd be out of consumers, and I'd increase my cash allocation. I think I can keep this brief in the sense that a lot of what's going to affect the stock market is the geopolitical situation. So we talked about that in depth. But if you got a 401k and you're just buying the S&P 500 index from Vanguard or Fidelity, and it's been going up, it has been going up, there's no question about that. And you're like, I'll just sit there and watch it go up. Be careful. We've been warning about a stock market decline for a long time. It's happening. Wall Street's out to sell you stocks, and CNBC says, up, up, up. There's nothing I see that's going to make that better. I don't think the Fed's done raising interest rates. I remember the 1970s, the stock market peaked. Dow Jones peaked in 1969. It didn't get back to that peak until 1982. Now, okay, 1982 was the beginning of one of the greatest bull markets in history, grant that, but 69 to 82 is 13 years. It went sideways. Now, again, there's volatility and dips and peaks, and I'm not saying you can't make money, but I'm saying that there's a 13-year period when the stock market ended up where it started, number one, around 1,000.
Jim Rickards.
Down. What you saw in the BLM riots will be polite. It'll be dog eat dog. There will be no police. There will be no services once the financial system goes down. So it's not just the financial system. Understand that the financial system being up and running, and people are happy with their 401k statements. They don't really care what the policies are. They don't really care what's going on, because in their mind,
the state of the economy and the stock markets in 2024. According to Rickards, investors should brace for challenging times ahead, with significant declines expected in stock markets. He advises reducing exposure to stocks, especially in sectors like technology and consumer goods, and instead suggests bolstering investments in cash, defense, energy, and mining sectors. Rickards highlights that the current economic
on the Dow, when you adjust for inflation, because we had massive inflation in the late 1970s, it was still down. That's 13 years. That's going to get worse because the U.S. is heading into a recession, and we may be in a recession. And everyone's like, wait a second. Yesterday, GDP was up 5%, and it was up 5%, but it was very heavy on consumption and very heavy on inventories. Well, consumption, obviously, people don't realize when wholesalers and distributors build up inventory, that counts as GDP. Well, it's fine to build up inventory if people are buying the stuff, but if they don't buy the stuff and you're up to the rafters in inventory, you got to start writing it down. This is where you see, you go to the Gap and get like 10 shirts and 5 pairs of jeans for $30. I mean, this is what happens. They slash prices. They do 2-for-1 sales. They just move the merchandise. And particularly in certain areas, stuff goes out of style. The fashion industry is notorious. Who wants last year's coat or whatever. So then the inventory situation comes down to the consumer. Are people buying stuff? It looks like the consumers just hit the brakes. A couple of reasons for that. Number one is during the pandemic, you go back to 2020, 2021, what was going on? Well, starting with Trump in, I think, June 2020, he gave everybody a $1,400 check. If you had a heartbeat, you got a check. And then Trump did it again in December, just before he left office. It was another $600 check. Biden comes in and says, well, I can top that. And Biden does in February of 2021, right after he was sworn in. Here comes another $1,600 check. Then there was Build Back Better, the Inflation Reduction Act, which is actually the greenest scam. We were running deficits of $2 trillion a year for about 4 or 5 years. The total spending was higher than that, but that was the deficit alone was about $2 trillion a year. Well, the Americans got used to that. Thanks for the check. And then there was a deferment on student loans. You didn't have to pay your student loans for about at least 2 years, maybe a little bit longer. And then when people got those checks, they saved a lot of it. So what happened in 2023? People drew down their savings. The savings rate got really low, like 3%. It was up around 13% during the pandemic. It's a little over 3%, 3.5% right now, which is low. They spent the savings they had. They didn't make new savings. And then they turned to the credit cards and ran up their credit card balances. Well, that feels good for a while. But then if you're paying the minimum and rolling over the balance and you're at your limit, your credit limit's used up, and the interest rates are 20%, some of them are 28%, you're going to double that balance in 3 years. So if you're like, I'll just pay the minimum this month and I'll figure it out, your balance is going up because the interest is compounding faster than you're paying it down at 20 to 25%. People are tapped down on their credit cards. They've used up their savings. They're getting into a deeper hole because the interest is compounding faster than they can pay off the credit cards. It is showing up in things like gasoline consumption. It's way down. The demand for gasoline is what economists call inelastic, meaning you just have to buy it no matter what the price is. You got to take the kids to school or get to work or go shop, whatever it is. You're just going to buy the gasoline even if you don't like the price. By the way, lately prices have been coming down a little bit, which is another, that sounds good, but it's actually a bad sign because it's disinflationary, which kind of leans in the direction of a recession. But for gasoline consumption to drop, forgetting about the price, that means people are not driving. They're not going on vacation. They're not doing road trips. They're not driving any more than they have to. There are a lot of other signs. We don't have time to get into all the technicals with negative swap spreads and inverted yield curves and all the rest. But it does look like the consumer slammed on the brakes. The stock market's starting to wake up to that fact. So I would say it's a pretty simple recommendation, Matt. Reduce your exposure to stocks overall. Increase your exposure to cash. You won't lose money on cash, assuming that inflation is not bad, and it'll give you a lot of optionality. You can go, if things get really, really, really bad, if you have cash, you can go shopping and find some bargains. But if you're in stocks and they go bad, you're just going to lose that money and never see it again. And if you do have stocks or some stocks, I wouldn't do the index funds. I would look at energy, defense, not for good reasons. There's enough wars going on, but defense will do well, and mining because, gold and silver prices and strategic minerals will do well. So defense, mining, and energy are the sectors I'd be in. I'd lighten up on tech, get out of everything else, go to cash. Treasury notes look attractive here because interest rates are going to start to come down. I know they've been
as possible for maintaining sanity and when there's just too much on the plate. I'll be honest with you, I'm trying to learn what Enbridge is. I believe it's some form of payment system involving gold. Okay, here's my simplistic perception. The Brics are in absolutely no hurry to install other non-dollar options. They're in no hurry at all. They can rely on the Chinese yuan because China said on a temporary basis you can do that. In Eastern Europe, they're using more and more ruble for settlement. With India, Russia has a problem. India wants to use the rupee. Russia's saying, we'd rather you not pay us in rupee. And Russia would prefer the Gulf region types like the dirham out of UAE, United Arab Emirates. India is pushing back on that. We have now the blockchain that is being built out as a platform. That opens the door to XRP. Its on-demand liquidity makes it a great candidate. I don't believe the Brics feel as though they're in any urgency to get their various options out there and to get their channels fully ramped up because they see a treasury bond default, because they see a government debt for the United States, it's gone out of control. So there's going to be a lot of gold demand. And as you get the gold demand for higher prices, it's going to create fever. And I think the Eastern nations know that we're going over 3,000 for gold, a lot better than the Western nations do. Therefore, they're going to continue with their gold load, increasing their gold reserves, to make available usage of the gold token. The gold token requires the parties to have adequate gold reserves behind the token. You can't just say, well, we're going to use the gold token. Well, do you have the gold behind the token? That's what they're doing now. It's going to be Russia, China, Persia, and Saudi providing the gold. And China will be more the dynasties than it will be the government. The government is, I tell you, the government, they're coming out with all this information about the People's Bank of China and all their increases in gold. Oh my gosh, they're buying probably 10 times that off the book. They're setting the stage for the Rothschild central banks to load up on gold quietly and secretly And then once we get near 3,000, they're going to push it to 3,000 flat, 5,000 then in the following, who knows, several weeks. And in the following months, 10,000. And miraculously, the Rothschild central banks will work their way out of insolvency. And to do that, they need a lot of gold. You don't just buy, 20 tons of gold and, oh my gosh, we're out of insolvency because the price went up fourfold. That's nonsense. You got to buy a lot of gold, and they will not be selling it. Those people who think, my gosh, there's so much gold out there, it's going to go down in price. I say there are a lot of televisions out there, and they're not for sale, and the price is not going down. There are a lot of shoes out there. They're not for sale. The price of shoes is not going down. It's one of the dumbest arguments I've ever heard from smart people.
In a recent and unsettling analysis, financial expert Bill Holter has issued a stark warning. The collapse of our financial system is imminent, and when it happens, the consequences will be far-reaching and catastrophic. Holter's insights paint a troubling picture of what lies ahead if the fragile economic structure finally gives way. He draws attention to the possibility that COVID-19 may have served as a catalyst, accelerating the downfall of a system already teetering on the brink. Holter's decision to relocate to a rural area early in the pandemic was driven not by fear of the virus itself, but by the anticipation of the societal upheaval that a financial collapse would bring. In his view, the collapse won't just affect stock portfolios or 401k balances. It will trigger a complete breakdown of societal norms. He likens the potential aftermath to the chaos seen during the Black Lives Matter riots, but on a much more severe scale. With no police or services to rely on, Holter predicts a Mad Max-like scenario, where the struggle for basic necessities such as food, water, and fuel could lead to widespread violence and disorder. He also issues a cautionary note for those living in gated communities, often perceived as safe havens. Holter warns that in times of crisis, even these seemingly secure environments could become dangerous, as trust among neighbors erodes and desperation sets in.
And we knew it was going around the world. That's when I bailed out. I mean, I bailed out by the time we got here, we were a week or 2 weeks into COVID. And the reason I did that, you cannot live amongst the population when the financial system comes down. I moved out here, had nothing to do with COVID. My thought process was they would use COVID as an excuse to take the system down. I mean, we've been on the precipice for so long, and they've been able to kick the can down the road, prop things up, and the system, I think at this point, there's no holding it up. But I mean, for the last 5 years, the system could have come down anytime they wanted to pull the plug. So to me, getting away from population was paramount. And the reason I say that, I mean, you could live in I know I'm going to be kind of skipping ahead because
that's fine.
Rarely do I ever get to see questions before an interview. But I did see these questions. We lived in a gated community, and the thought process there is you're safe. You're not safe because there's assholes in every community. And there was roughly, call it 300 families in this gated community. And we were, at that point, we're only about, 20, 25 miles from Austin, and Austin is slowly bleeding out outside the city limits. And I'm going to say probably 70% of those people were liberals. And their mindset is, if things go bad, your stuff is my stuff. And the problem in a gated community, yes, there's strength in numbers, there's no question about it. But if half or more of those numbers, or even 25% of those, the community, you have to be able to trust the people that you're with. And you have no idea who's friend or foe when you live in a community like that. And it doesn't have to be bad people. I mean, you have a husband and wife with 2 or 3 kids and their kids are starving, they're going to take your stuff or do anything they can to feed their kids. So it was just my thought process at the time, and the more I've lived out here, the more I see things happening. I mean, for instance, the summer of the BLM riots. I mean, I can't even imagine. Actually, I mentioned the BLM riots. Once the financial system comes down, what you saw in the BLM riots will be polite. It'll be dog eat dog. There will be no police. There will be no services once the financial system goes down. So it's not just the financial system. Understand that the financial system being up and running, and people are happy with their 401k statements. They don't really care what the policies are. They don't really care what's going on, because in their mind, it doesn't affect me. I'm okay. So just understand that the financial system affects way more than just the account balance, just what you see on the screen or your paper monthly or quarterly statement. It's going to affect everything. Society itself is going to break down. And I used the term back in, I think, 2017 or 18. I mentioned that the world financially at that point was turning into Venezuela, and that the end result would be something that resembles Mad Max. I mean, is it going to be, is everything going to...
Rickards predicts a severe economic downturn in 2024, driven by a mix of geopolitical tensions and domestic financial instability. He advises investors to minimize stock exposure, increase cash holdings, and focus on sectors like energy, defense, and mining. Rickards also discusses potential repercussions from ongoing geopolitical conflicts and their impact on global markets. The video covers financial predictions for the near future, emphasizing the risk of a major economic collapse due to stock market trends, consumer behavior, geopolitical conflicts, and macroeconomic indicators. Rickards provides investment recommendations based on his analysis of these factors. Good evening. This is a special report on the financial outlook as analyzed by economist Jim Rickards, who has raised significant concerns about...
We've got now like 5 or 6 categories for price inflation, and they're all double the official aggregate stated price inflation. They're saying it's 3, 4, 5%. We've got numerous items that are 8, 10%. Okay, not believed. Inflationary depression, there's no way out. Can't raise rates, can't cut rates, just like I said before. The big insolvent banks are in the same position as the central banks. They've gotten rid of the GLD, the inventory, so they cannot short the gold market anymore. They got almost $1 trillion in unrealized losses for bonds. They never say that those assets are treasury bonds. They can't sell them, Chris, because from convexity, it would force a snowball effect and a bond default. The big banks are loading up in gold. I did a consult call with a fund manager a few months ago. He said, Jim, every Wall Street bank has gold and they're doubling their gold. Every Wall Street bank has gold and they're doubling their gold. The depression means they need to cut rates. The inflation means they need to raise rates. You cannot sell a bond with rates going down when inflation is going up. You can't do it. They don't show up. And we're handing money under the table, Chris, to England.
The Brics nations are expected to continue raising interest rates due to excessive debt levels. Jim Willie predicts a financial crisis by June or July before the November elections, largely driven by a bond crisis. This potential crisis emphasizes the need for careful financial strategies and highlights ongoing concerns about the U.S. economic situation. In a recent discussion, Jim Willie shared insights on economic conditions, emphasizing the significance of gold accumulation by central banks. He predicts that the rising demand for gold will continue to drive its price upward. Despite challenges, Willie remains hopeful about restoring economic stability and returning to a gold standard. He stresses the importance of addressing societal and economic issues, advocating for a return to traditional values and a focus on economic growth through innovative technologies like Tesla patents for energy production. Willie also touched on the broader societal impact, expressing hope for a cultural shift back to fundamental values. He emphasizes the role of divine intervention in overcoming challenges and highlights his personal experiences of protection and guidance through faith. He calls for the exposure of negative influences within the country and a renewed commitment to traditional values and divine guidance.
To Belgium and to Ireland, we're handing money under the table for them to show up and buy our bonds. And it's not showing up on the tick report because they're giving it right back under the table and it's going to the Fed balance sheet. Before I get to my list, I'm going to talk to you briefly about what I call foreigners are selling treasury bonds at a record rate. We've got a tremendous amount of supply of bonds. The Department of Treasury is obligated to buy back the bonds. And the Fed is where they put the bonds. So how's the Fed reducing their balance sheet?
Potential financial crisis and a U.S. Treasury bond default. China and Russia, along with India and Turkey, have significantly increased their gold reserves since 2010, with substantial purchases continuing into 2023. Analysts speculate that the Brics nations may be preparing to implement a gold-backed trade currency. This reflects a cautious approach amid advancements in blockchain and cryptocurrency technologies. Despite their ongoing efforts, the Brics nations do not feel an urgent need to fully implement alternative payment systems. They are temporarily relying on the Chinese yuan and other regional currencies for trade. Jim Willie predicts a significant rise in gold prices, potentially exceeding $3,000. This is driven by increasing demand from Eastern nations and central banks' accumulation strategies. The United States faces an inflationary depression, with economic indicators diverging from official reports. Rising inflation rates and government debt exacerbate the situation, leading to concerns about the country's financial stability. Central banks are bolstering their gold reserves to prepare for potential financial crises, with significant buying by Rothschild central banks anticipated to drive gold prices even higher. Large and solvent banks face challenges with depleted inventories and significant losses on treasury bonds, pushing them towards gold as a safe haven asset. The U.S. Treasury faces difficulties with unsold bonds, leading to increased reliance on the Federal Reserve and foreign entities to buy back bonds. This further complicates efforts to reduce the Fed's balance sheet. Foreigners are selling U.S. Treasury bonds at a record rate, necessitating the Treasury Department to buy them back and place them on the Federal Reserve's balance sheet. The surge in gold prices underscores its importance as a safe haven asset, offering protection against financial instability amidst signs of an inflationary depression. In the U.S., Jim Willie and analysts emphasize the significance of gold accumulation by central banks and its potential impacts on global economic stability and gold prices. They urge individuals to consider gold as a key asset in uncertain times. He shares personal anecdotes, including his strategy of using firearms as a deterrent to potential threats, reinforcing his belief in the need for individuals to be capable of defending themselves and their property. Drawing from his experience in Costa Rica, where crime rates were high and underreported, Holter highlights the harsh realities that can emerge when societal structures falter.
He passed away quite a few years ago, but one of my mentors, we talked about this, and I mean, we weren't talking about, the world collapsing, but we talked about the homeless. And what he said, and it just makes total sense, is what kind of an idiot would want to be homeless in Buffalo, New York versus Miami?
Right.
I mean, so you're in Miami and it's 95 degrees out and it's hot, but you find a tree and you lay under it and you get to live to the next day. Buffalo, New York, it gets down to what, 10, 20 below zero or whatever, or you get 3 feet of snow, you're pretty much going to die. So if you're going to be homeless, you don't want to be in a southern climate,
Right.
And that would be the same thing, because what's going to happen is when this thing goes down, everyone's going to be homeless, but in place wherever they are. Both times we were somewhat rural, but not totally rural. But what I would do is probably every 3 or 4 weeks. First off, I did have 2 German Shepherds down there, and they don't like black dogs. I mean, they look at a black dog and it just freaks them out. But probably once every 3 weeks on a Saturday or Sunday, when it would be quiet, I'd go and fire 30, 40, 50 rounds. And all of a sudden, probably within maybe the 3rd time, 4th time I did that, my driver came to me and said, "Bill, everyone around here calls you the crazy gringo with guns and 2 black dogs." And I'm like, well, that was the whole point.
Right.
So, yeah, guns will let someone know you're there, so it will attract attention.
Right.
But it's the attention that you kind of want attracted because they know you're armed.
Right.
And, whether they think you're practicing or not practicing or just firing rounds up in the air or into the ground or whatever just to make noise, it doesn't matter. They know you have guns.
Right.
And they'll walk through an easier door to walk through. When I lived there from 2006 to 2011, and I don't know what the numbers are now, but I can imagine they're higher, there were 2 home invasions every day in a population of 6 million people that really did not get reported. They were never became statistics because they didn't want to scare the tourists. So in order to